and welcome to my take on my YouTube channel. We're going to talk a little bit about this rally we had. We had a 42% rally, and you can see it from this March low right here, okay, up to this peak right about here. It's about 42%. Now remember, if you lose thinking in easy terms, if a stock goes down 50%, it just doesn't go back up 50%, you made your money back. If stock goes down 50%, you got to get 100% to break even. Stock breaks down 40%, you need 80% to break even. So this rally that we had right here, how we got this rally going, remember, is with all this news, okay, all the fake business news networks, all about, look, you know, the virus is now behind us. We're the opening of the stores, the economy's opening. Everybody's pleased with the economy. They've been printing money like crazy. Okay, so they've been printing. The Federal Reserve over here has been printing money like nuts. Okay, $215 billion a day to push the stock market up. No longer do you need to have profits to push your stock up in a company. No. As a matter of fact, it's called prosperity without profits. It's called QE. Print money, give the money to the five banks. The five banks turn around and instruct you which stocks to buy. And they usually buy the bank stocks because you need the bank stocks to move the market to hold that rally. Now, here comes the problem. Now, yes, the market had this rally, but it's not going to be able to sustain itself because we got the wrong leadership. What does that mean? It means that when you take a look at the rally here, okay, it's not the banks that are leading. You got a handful of stocks. You have the four FANG stocks, and you have Microsoft and Apple. They're leading this rally. So you got the banks, the Federal Reserve, printing money every day, injecting it, and giving it to five banks. The five banks take it and give it to CEOs so to buy their own shares, or the banks will buy the shares themselves just to keep pushing the market up. Exactly what they did back in 2008. Matter of fact, if you look at 2008, as I showed you last time I did this thing, exactly the same thing they did back then. So now here's where we stand today. All right, so today I want you to understand that when a market falls or stock falls, okay, like this, it only can go back up 1/3 of that distance, only go up 1/3 of that distance. So everybody shorts it, they buy their stock back, their profits, it pushes up 1/3. You almost can see it right here, okay? You can see right here, the market dropped and then it went up about 1/3. See where it red before it turned green? Okay, so what do you need to get the rest of the way up to here? You need the banks. And the way it works is like this. Let's take, for example, we have, this is the S&P right here, right now. Okay, so the way it works is if you have a stock, okay, let's take the bank stocks first here. Let's take the S&P. Here's the S&P right here, okay? Whoops, sorry about that. Here's the S&P right here. So here's your S&P. Let's just do it like this. There's your S&P, okay? To push the stock up, your stock, let's take your stock, we'll put it in yellow, put it over here. Let's say you own a stock right here. Okay, let's say you own Ford, just for the sake of argument. Okay, you own Ford. Okay, remember, ever since Ford dropped, it only can go up 1/3 of its distance on its own. What do you need to push your stock the rest of the way if you got Ford? You need the S&P. Okay, because you need 500 stocks pushing up. Okay, if you can get 500 stocks pushing up against, here's your 500 stocks right here. Get that pushing up against your stock. That'll move your stock up. Okay, keep holding it, moves your stock up. But if you don't have the banks, you got a problem. Okay, and that's our problem right now. Normally, you have the banks that are leading. Okay, and when you have the banks leading, okay, okay, this is what you need. Here's your banks. You need the banks pushing up your stocks, pushing up the S&P. If it pushes the S&P up, the 500 stocks will push up your stock. So that's how, when the stock drops, it goes up 1/3 on its own and stops. To make your stock go the rest of the way, it's important the banks lead, pushing up the S&P. That'll push up your stock. But we don't have the banks leading. There lies the problem. We don't have the banks leading. And so instead of the banks in here, what we have leading is the FANG stocks. Okay, so there's our problem right here. We got the FANG stocks. So if I put the FANG stocks in here like this is the problem. So we got the FANG stocks, got a handful of stocks. We got the FANG stocks, the 4 stocks, plus we got Microsoft and Apple, and they're leading. Okay, well, that's okay. You can lead for a while. It'll push up the S&P somewhat, but it's not sustainable. To be sustainable, you got the wrong group leading. You need the bank stocks in there. This is what you need. You need the bank stocks, not the FANG stocks. Yes, the FANG stocks can give you that acceleration to the upside just by pure momentum. We know that. Okay, but it can't sustain. The FANGs can't sustain the rally because the FANG stocks are not important to the economy. The most important thing to our economy are banks, the financials. It's everything. Okay, if you don't have the banks, and that's why the market crashed in 2008. The banks crashed because of all the heavy debt and the mortgages and all that sort of stuff. So that's where we are now. We have a problem. And if you look right now, the bank stocks, XLF, is the symbol for the bank stocks. Let's put it up here, XLF. And here's where the bank stocks are, down here. Now, if I put up XLK, okay, which are the big tech stocks, and the FANG, including the FANG stocks, right here, you see the wrong leadership. You got the FANG stocks up here, and you got XLF down here, just the opposite of what you need. So that's the problem with the S&P rally right now, okay? The S&P rally, that's the main problem. It's got the wrong leadership. But nobody on the Fake Business News Network are going to tell you that. So here's what they're doing. So they're saying, okay, what we're going to do is print money, and we'll keep printing money. We'll give it to the 5 banks and have the 5 banks buy all the stocks. And that's what they've been doing. The 5 banks are purchasing their own stocks. That's exactly what happened back in 2008, which I showed you a little bit ago, and I'll remind you again. But that's exactly what happened in 2008 right here. Okay? They came in and bought the bank stocks. They printed money and purchased $1 trillion worth of bank stocks. The market went up 80%. They printed $650 billion, printed that money to buy bank stocks, $400 billion to buy bank stocks, $1 trillion to buy bank stocks. They also were buying at the same time treasuries to keep interest rates low. So this is what they're doing exactly the same thing again right here. But now this is a bigger problem this time though, because this time, okay, we have the wrong leadership. So unless the leadership changes back to the banks, then we're going to be testing these lows. Now, what they're doing every day is coming up with a story, a fairy tale. Okay, so like yesterday when we opened up, the market was down. Yesterday on this 15th of June, the market was down 600 points in the morning, and they said the reason why it was down 600 points in the morning is because they were concerned about the virus, again, propping up. That's not true, okay? We all know that they're doing more testing, but that's not the virus is true, but that's not why the market dropped 600 points yesterday. The reason why the market dropped 600 points yesterday, okay, is because of the fact that we have a major problem of debt. But the Fake Business News Network's not going to tell you that, okay? They don't want you to know that. And we got another big problem because of all the printing of money. You go back, remember when the market fell back here in September 2018? Remember they pushed it up with printing money and the fake story that they kept on saying how they're going to sign a deal with China, sign a deal. Every day they're trying to sign a deal, sign a deal, sign a deal. But the reason why the market dropped here, they had the wrong leadership. They had the FANG stocks, not the banks. That's why we crashed. And because of the massive debt we have in this country. They went back up with all these stories about how they're going to sign with China. But then again, what took over? The concern? Debt. Bank. Debt. Banks weren't leading, and we got tremendous national debt, and household debt and corporate debt. That's what dropped it again right here. They ran it back up again with more stories, just like the story here. We're almost ready to sign with China trade deal. There's every day they're going, oh, we're almost we're going to find a vaccine. We're going to do this. We're going to do that. Every day there's a story. Okay. Oh, optimism that the economy's opening. But see how it dropped here? Again, you got the wrong leadership. So there is a major, major push to get above this point here. If they make it, that's fine. If it's green, we'll buy. But if they continue not to make it, and this continues to be red, then we're going to test these lows, and we're going to catch it all the way down. The key is right here. See where this red line is? Here's the key on this red line. It's got to break 80%. See, it turned red. That tells us institutions are pulling money out. Now, if it breaks 80, that's fine, but the key is at 68. That's the key, at 68%. When this breaks 68%, then that means you got a high probability. This is going to go from 68% down to single digits, giving you a 10 to 20% return. So that's what we're looking for right now, to see if the S&P is going to break to 68%, because the banks aren't the leaders. We got the wrong leadership, okay? So right now, the fake Business News Network is going to keep giving us stories, do anything to keep propping this market up. But at the end of the day, we're going to visit those lows on the on March lows again. Who knows when, but we'll visit it. Okay, we'll see you on the charts. Remember, if you join the gang, it doesn't matter if the market's going up or the market's going down, because you make just as much money both directions. We make sure our members are making money every time the market drops through shorting. You can't do that with your 401k. See you on the charts.